Hi guys, Piotr here, this is LiteFinance Global YouTube channel, and it's my pleasure to be with you again. Red everywhere, one would say, right? So we are going to try to find reason or reasons why we are falling almost everywhere, and then we are going to go through few charts to try to prepare ourselves for the possible scenarios. All right, so first thing first, why we are falling. Right now, one may say yes, because Powell finally said that the inflation is not, that's the important thing, is not transitory anymore, right? For a quite long time, the Fed been saying that the inflation, and other central bankers have been saying that the inflation is transitory. Even more, when it comes to that point, yesterday the member of the ECB said that when it comes to the EU, European Union, the inflation is still transitory. All right. So at one point we might see quicker tapering in US and still losing policy when it comes to the ECB. That could be important when it comes to the euro dollar, right? But when it comes to the Powell, inflation is not transitory anymore. That of course hit US market. Now the second thing, for quite some time we were getting information about the new COVID variant, Omicron, but well, for quite some time market didn't want to react on that, but finally when we found first case in US, it was the reaction as well. And now here is the big question mark. Really, did we react into those news, or market was ready for a correction, because that's how it looks for now, but it was looking for excuse to move lower, right? That's what, well, I would like you to think about. Anyway, do your own research, do your own homework, right? Okay, so how the charts looks like. We are going to start with the indices. That's the Nasdaq daily chart, right? So what I see here are two things. First thing first, if you are going to start with the weekly, the previous week close, it was huge outside week, right? What does it mean? It means that we made new high compared to the previous week, right? And we close below the low of the previous week. Monster supply level, all right? Now, when it comes to the rest of the chart, of course, the breakout candle. So in that case, I'm going to use as a weekly chart, so I'm going to use the blue line. This bottom of that breakout candle on the Nasdaq, 15,300, is going to be very important, and it's gonna be well visible on a daily chart why this level is so important. All right, so let's have a look what we have here. Now the level we discussed on the weekly, that's the base we've seen ahead of the monster rally and the new high, right? Then was the pullback and rally. Now if you are going to take into the consideration that bottom and the things that we close one of the day this week, we close below, meaning that that level is being broken or been broken. All right, so what I see here, and it's gonna be visible on the smaller time frame, I like this one. I really like this one. All right, with this neckline and retest of yesterday, very interesting things. Especially we have the payrolls we have to see where we are going to close on a weekly basis. That's gonna be quite important. All right, and as I mentioned, intraday chart also looks similar, and when I was preparing my chart into that video, that's how I see the things when it comes to the possible scenarios and levels. And as you can see, that's 15,300 based on the weekly we discussed a second ago. All right, and if you are going to make the measure between the neckline and the top, if we are not going to use the shadow here, right, if we are not going to use that bow of top, so that's the target. The full head and shoulder target is even closer to 15,100. But what is interesting here, that's going to happen with that trend line. So we have a very nice confluence when it comes to the intraday chart, daily chart, weekly chart, in between 15,300, 15,100. So that's the Nasdaq. But not only indices were going down, right? Also gold went down strongly, right? For quite a long time, we've been told that the gold is quite a good hedge against the inflation, and looks like it's not the case anymore. Looks like it's not the case anymore. So let's start with the higher time frame when it comes to the gold, right? As of now, the bulls are going to treat that as a big bull flag, all right? On the other hand, if you are a seller, then you see a little bit different story. You see the range as of now. If the bears are gonna be able to move through 1,700, 1,690, the bottom of that consolidation, right, we might see retest of 1,550 based on the monthly chart, all right, red lines. So we have the space here, the first target 1,700, 1,690, and if we are going to break lower, the first target is going to be 1,540, right, or double of that range from 1,900 to 1,700, meaning 1,500, the bottom here could be targeted. When it comes to the upside, all right, we have to take out and close above 1,900 based on these two highs, okay? If we are going to get the close above, the next target is going to be 1,960, and the next one 1,985 based on the monthly chart. And if we are going to break that level, then $200 to the upside could be the case, and we are talking about the 2,200. As of now, the bears are trying to move lower, right? So that was the gold, but not only gold is going down. Also, after huge and monster rally, the crude finally went lower as well, right? After hitting 84, right, and two retests, we gave up. And this looks like Niagara Falls over here. So what the bears are looking for, it could be, with the delay, it could be similar scenario we were discussing second ago on the Nasdaq. We might drew, based on the daily chart, head and shoulder. In that case, we are talking about the levels close to 75 this type of the correction could be seen. But really, if we are going to break the neckline, right, we have $23 lower from here. It could be that we might retest 37. Sounds amazing, but that's untested consolidation. We broke through. We never retest that level, right? So if we are about to drew the head and shoulder formation, that's how I see the things might happen, all right? On the other hand, if we are going to closely look yesterday price action, all right, yesterday price action, it's nothing else than over under. So it's not accident that we found the bottom yesterday. Of course, from here we might target levels close to 75 we discussed a second ago, all right? So be careful. It could be that we might want to drew swing low. We might retest 65, 64, 70, and from here, if you are a bull, we might see higher levels. So guys, I think that the market was waiting for any kind of this excuse to move lower. Now we might see a little bit of the bounce, and then finally at the beginning of the 2022 it's gonna be very interesting. The bulls have a plenty of work to do, all right, and the bears are going to try to take off, right? That's how I see the things, guys. It was my pleasure to be with you again. Do your own homework, do your own research. Wish you all the best. Great next trading session. See you around. Take care and goodbye.